Exxon Mobil beating earnings and revenue estimates for the second quarter. That stock right now up by about half a percentage point. And joining us in an exclusive interview is Exxon Mobil's chairman and CEO, Darren Woods. Darren, first of all, thank you for being with us today. It's good to see you.
Good to see you too, Becky. Thanks for having me on.
Okay, so let's jump into the numbers here. Earnings have come down for all of the major oil companies. That's because oil prices have come down pretty substantially, but production has increased substantially, and that's probably why you beat expectations today, I'm guessing.
Yeah, if you look what's happened, you're right. As commodity prices move, everybody moves with it. A low tide, all boats fall, and high tides, all boats rise. One of the things that we're real proud of, if you look at the impact that pricing have had on the drop in earnings, we've offset more than half of that with improved production, a better mix of production, higher value products, and significant structural cost reductions. And so the things that we can control, the business is delivering on and having a really positive impact on our earnings. So as the market kind of moves up and down, I think we're offering a very stable, consistent value proposition to our investors and our shareholders.
Where do you see oil prices headed over the next 12 months? I know you don't have a crystal ball, but you guys certainly have a better idea than we do.
Well, I would say if you look first at the demand side of the equation, demand is very strong around the world. So very good demand for transportation, fuels and products, crude, high demand for chemicals. The challenge has been supply, which has been putting pressure on pricing. OPEC continues to unwind some of its production. And so as you look going forward, depending on what happens with demand and depending on what happens, frankly, with who's all out in the market producing with respect to some of the national oil companies, we could see the market go longer in the back end of the year. Frankly, we're prepared for that. If you look at where prices are at today, they're higher than the basis that we had in our plans as we developed our go-forward investments. And so we're prepared for a lower environment. We expected a lower price environment, and there's potential that could manifest itself at the back half of the year.
If that happens, I guess you're saying that the dividend is safe, the share buybacks are safe. Just that's what investors are worried about. If you've got a strong balance sheet to make sure.
Yeah, we are. We tested. We do the plan. We have an outlook on price. We recognize that we can't predict where prices are going to go. We always, as we develop our business and investment scenarios, test them against some extreme cases. We ran our plan through a scenario that frankly had pricing that was worse than COVID, and we had a very robust financial situation there. Obviously, we're always going to meet our dividend and could continue with our buyback program. So we feel very, very confident that today and for any reasonable forecast to where prices could go, that those distributions are very safe.
Okay. I mean, that's like stress testing, your own form of stress testing like the banks do, too.
Absolutely.
Darren, let's talk a little bit about the Hess arbitration, because we haven't had you on camera to talk about this since that deal went through a couple weeks ago. You lost in arbitration. What happened? Was that a huge shock to you, the reading that came back?
Yeah, I would tell you we were very surprised. I think as you and I talked about that morning, I was surprised. If you remember when we talked about this in the past, Exxon negotiated and co-wrote with Shell the agreement, the operating agreement for Guyana. We understood the intent of that document, and we firmly believe that the language in the document conveyed that intent. As we went into the arbitration, we went back to the folks who negotiated. We went back and talked to Shell about it, had them review the language and our position on that. We engaged third-party lawyers and experts in the industry. And literally all those folks that we had review the language and our position reaffirmed that we had the right and, frankly, that we would prevail in this challenge. So we were very surprised when it came out. If you read the finding, they state we had a reasonable, commercially valid position, but in the end of the day, they sided with a more narrow interpretation of the text. It is what it is. We're moving on from that. That morning, I reached out to both Mike and John and congratulated them on the win. Obviously, it wasn't something that we were looking for, but I think it's time to move forward and continue on the business. As you know, the implication for us, frankly, is that Hess moves on and Chevron takes Hess's place. So our operation with respect to Guyana is unchanged.
Yeah, I spoke with Mike Wirth about it last night. He talked about how they've been able to hit the ground running because they had more time because of that arbitration to get things ready to go. They're going to be doing the synergies they'd anticipated in the first year in 6 months. I asked him, actually, if he was grateful to you for slowing that down so they could be ready to hit the ground. He said no comment. He did chuckle.
Yeah. Well, that was probably the nicest thing you could say, so I'll take it.
Well, it does bring up, you guys are partners not only there but in other places. He said partnership is core to Chevron. I know you have said similar things. Will it, you guys have been competitors for forever, I guess, going all the way back to Standard Oil over a century breaking up. How do you get along with those situations? Will it work in Guyana and other places?
Yeah, I think maybe one of the factors that's not appreciated for our industry is it is fierce competition in a commodity business. It is hard knuckle competition, which I think is good. It makes all of us better. But at the same time, we're partners all around the world, and so I think what's very different for other industries, you have to learn to walk in balance between, on the one hand, being partners and working closely together, and on the other hand, fiercely competing. And I think the industry has a very, very long history of successfully doing that. If you look at how our organizations work together, both with Hess and Chevron throughout this arbitration, a really good collaboration, continued excellent partnership, and working everywhere we do business around the world together in our ventures. And so I'm confident that that's going to be the path that we go forward on. We're all aligned on we want to make these ventures successful, and so I have no doubt that we'll continue to have a constructive partnership and continue to work together to grow value all around the world where we're in partnerships and joint ventures.